Hey everybody, DayTraderRockStar here, and today I'm just going to do kind of a recap of the webinar we've been doing this week. We did a 4-day webinar,
Order submitted.
a live.
Filled.
Oh, we got a divergence going on here right now,
submitted.
live.
Order
This is exactly
submitted.
what we're talking about. Everything is always live. We actually have a
filled.
nice 5-minute divergence happen right there, and the profit coming in. That was the rock bot that just took that trade right now. If I move over here, let me see if I can get it on the screen here fast. I'll move the rockbot
Order filled.
Oh, it's already taken off here. Well, that just shows you how good this, the divergences are working right here. Just had a nice 5-minute divergence. Came up on the rockbot channel, on the MES. It's taking profits on the way up. It has a trailing stop now that's set up here. One contract, you had it following the price up, See it go up, and the price goes up. So that's, this is identifying the divergences on the 5-minute time frame. We have that running on the Rockbot channel, which is a different channel, but definitely out there for members of Day Trading Radio to use and help identify these important levels that make us all the money during the day. This is our bread and butter, these little divergences. So getting back to the markets right now, and getting back to what I was just about to do, we're going to do a recap on it. A lot of people wanted to know if I had recordings of the webinar. Well, because we were doing it live, and there was a lot of other talk in when we do a live show, and I'm answering stock questions, I'm answering everything. It's just a constant conversation going on with the members in the room and stuff. So it wasn't I didn't want to record all that. It would be too long. So I wanted to kind of break it down on its own video and kind of send it out and kind of just do a recap of what we'd learned this week and what we did. All right. And then if you need any help, you could follow up with me. I could help you through some of the issues that you had trouble with. Just reach out to ironaction@yahoo.com. or DTRS@daytradingradio.com. All right, so again, just an introductory phase. In the video, or actually in the webinar, we went over the different brokers to use, how to set up your charts, basic 3 basic patterns, some advanced techniques and concepts and rules, the 4 best trade setups. And the goal here is using a very small account, using an account between $2,000 and $3,000, and making up to $1,000 per month on that. Now, the goal here is making $20 to $40 per trade, 3 to 4 trades a day. You could even say your goal is to make $100 a day trading this style. You have a very small amount of money you have to put up if you get a nice discounted broker there. We'll talk more about that in a second. And again, we went over a lot of this stuff. I'll try to kind of narrow it down to you. Oh wow, what a trade that was. Just came in. All right, we're going to be talking about scalping today in this webinar, the scalping method. It's just holding for several minutes. And now there's everything for me when it comes to trading, the style of trading, the high probability method, the divergence style method that I trade. Everything is defined. Why I get in, how long I get in for, when I get out, my stop, everything is defined for me. And that's important for me. We all have different personality types. For me, to be that organized helps me a lot. It takes away a lot of the fear of trading. It takes a lot of the questions and a lot of the uncertainties of trading come out because it's such a great setup. It's very easy to identify a nice divergence, get in, place my stop, understand where I want to take profits, how I want to move my trailing stop up. All these things are all answered for you. So let's just start from the beginning. We're not going to make this too long. We're going to kind of review this. And again, we're going to be talking about the scalping, the micro contracts. The micro contracts, let's just start with that fast. Here's just a basic breakdown. We have the micro starts with an M, micro E-minis, or the ES, micro Russell 2K, the micro NASDAQ, and the Dow micros. Each one for each point, just to make it easier, each point, if you think of one contract moves 1 point, A lot of people think about the E-mini contract. 1 point really represents a $50 move. Well, the micros are 1/10 that. So on the MES that we typically use, 1 point would be $5. All right, $5 on 1 point. So if we had a move, and again, to break this down to kind of give you an example of that, if you had a move in the market today, you picked up this divergence, that the 5-minute divergence came in, and you just happened to get in, and let's just say you got in at, give you benefit of the doubt, you got in at 44.50, and you took it off here at 44.60, and you got 5 points out of it. All right, not that big of a deal, but per contract, 5 times 5, 25. A $25 trade with one contract, just on a divergence. One contract, you put up $50. That's what usually the typical discounted margins are on these. If you go through a non-discounted broker, you could be paying thousands of dollars for your contracts. All right, so a typical setup like that per contract. Now you always want to have multiple contracts. You can start off. I always say start off with a minimum of 3 if possible. And that way you take profits on the way up. So say you just got 5 points on 3, or 25, 25, and 25, that's $75 right there. $75 just on that divergence, one divergence. Now we've typically identify multiple divergences during the day. On average, I would say 3 to 5 maybe. And not to say that there's sell-side divergences. We also have other patterns that I trade, the 2020 bull flag, and some other good VWAP plays or trend line and channel line rotations. But the key here is really the divergence. That's your money maker. And when you have a nice divergence, you want to take that and you get nice moves. There was a nice divergence back here right off the VWAP. That was a 3-star divergence, and you can see you could have got in 52 maybe and went up to 60. That's another big 8-point move before you get your first rotation. And again, that's all we're waiting for. That's our business plan. Our business plan to identify the divergences, get in here, multiple contracts, take the first one off, and we'll talk about that on the rotation. Move your break-even stop up, follow it up. Lots of times I'll say, follow it up using one of the moving averages as your stop or your guideline for your stop, and you should be good. The market just actually came off that bottom there. All right, so let's get back to that webinar recap here. All right, let's see here. We got this going for us. We talked about the setting up our charts. Let's just set up our charts fast on this. This is basically the overview of the methodology and what I use on my charts. I put it in kind of a little flow chart here. Stochastics are my main indicator, and from that we have multiple patterns and multiple techniques that I like to use: lane divergence, triple threats, or 2020 bull flags, coils, and flag setups. And along with the stochastics, I look for confirming trend lines or channel lines. If the price is on a moving average or a VWAP, is a recognizable pattern, a wedge, a 1, 2, 3 pattern, flags and pennants, support and resistance line, and the wild card, which is really good, is the reversal candles, hammers, piercing patterns, engulfing patterns, and the opposites of those. All right. In any case, whenever we do take a trade, our stop goes under the divergence low, 1 tick under the divergence low. That is probably the easiest thing to do to protect yourself. So whenever you have a divergence, I call it a divergence. You see a divergence, you should have a candlestick that goes with us, goes with that setup. You put a stop 1 tick under the candle low to start your trade off. When you set up your charts, one thing you want to do is just have the right indicators up there. You don't have to, there's so many, there's hundreds and hundreds of indicators out there. I just kind of go through the ones that I would like you to have on there. The 20 and 50 and 200 EMA, very important. We use a lot of those, identifying our trend, if we're trading underneath it or above it and holding on to it. Next thing is support and resistance lines. Sometimes you can look for that. It would be called the open, close, high, low lines. And lots of times your indicators you'll have that on your indicator package on your charts, and it'll just put in like here it is, low, previous high, previous low, open and close. All right. Stochastic bands, fast, fast, full. You can keep them all fast. I don't want to, get you confused on this. But, this is an old, I usually use the 9, 3, 14, 3, 44, and the 60, 10. Here, there's just 3 of them on here, the 14, 3, the 40, and the 60. I would say get rid of the 40, use the 9, 3, 14, the 9, 3 is the fastest, the 14, 3, and the 60, 10. I need to update this slide here. So, again, 9, 3 is your top one, 14, 3, and then the 60, 10. And then the Candlestick, the Candlestick counter, I think is very important to have. If you're in the zone, you're watching for reversal candle, you can time that candlestick. It'll be on your screen there. If you have that option, I would put it in there. As a candlestick counts down on a 1-minute chart or the 5-minute chart, you could see if there is a big reversal. And if you only have a couple seconds left, lots of times you could actually, go ahead and take your position knowing that that reversal candle is going to confirm. So I always like having that candlestick counter. Same setups are found on your daily and weekly charts, meaning that anything you do on the 1-minute, 5-minute, 60-minute time frame, you could do on the daily and weekly. Same divergences, except the time frame is based off the daily and time. So if I'm looking, and again, my rule of thumb is, especially with a 1-minute scalping divergence, we look for a move 5 to 7 periods. Now, I always say periods because we use all different type of charts. And the period of our chart determines what period we're using. So in this case, this is the daily chart. So if I say period, we know that we're looking at, a daily period versus a 1-minute period versus a 5-minute period. The divergence, what I like to, again, on our 1-minute time frame scalping divergences, when we do take these scalps, all right, we take them and we take our first profit off on the first rotation. The first rotation typically comes 5 to 7 candles after the setup. All right, it could continue to move higher. That we determine by our 60-10 down here, which is pointing higher, and that gives us a good indication of how, what the trend is underneath. Like the 1-minute time frame is very, very tight. It could go up, it could come down, and stay within a bigger trend. So we want to have a 1-minute time frame, but we also want to have our 5-minute time frame head in the direction of our trade. That makes it much bigger, and it gives you much better upside. So you take profits off on your first rotation, and then you kind of manage that. You put your break-even stop in, and let that play out. Now you could probably gauge by that 60-period time frame some other things that you might be starting to develop a channel or a new trend. And that's takes a little time to recognize, but pay attention to those moving averages. Once you get through that 15, 20-period moving average, you want to use those as reference and possibly as a stop. Also underlying trend lines. So in the place where we talk about our periods and we get a good divergence here, again, we typically takes 5 to 7 periods. So in a day, on a daily chart, we're looking at 5 to 7 days. That's a nice swing trade. It gives us a lot of time to be in that trade, lets it work its way up before getting overbought, before maybe it gets a little choppy. This one continue to move higher, but again, in this case, this is a great example. You have the divergence. You kind of have that 1, 2, 3, 4, 5, 6, 7. You start to get up there, and 5 to 7 days, you start to get overbought. And then once you take that, you should be taking profits as you get into the overbought level. You just never know. A lot of times it's just as easy, and I always say this is half the battle, is when you trade in short-term, long-term, make sure you're in the same direction as the stochastics. It's just an easier setup there. It's just easier to be with the current trend. 60-minute divergences, same thing. Lots of times divergences happen in falling channels or wedges, especially the falling channel. You have a series of lower lows and lower highs, and then eventually you're going to have a lower low but a higher high on the stochastics, and that's going to give you the opportunity to get in and watch for that channel break. 9 times out of 10, you're going to break the channel you're in when you have a divergence in that channel. Again, same thing about the there's a 60-minute sell signal right over here. But again, when you get oversold, chances are of that move back up. When you get overbought, there's chances of a move down. Pretty simple. It's pretty simple, just waiting for your trade. Same thing with the daily divergences. I'm just going down some of these charts we didn't go over. Now, you could use these divergences if you don't trade futures. You can trade those divergences on the SPY or any stock, all right? You might not get the leverage or the potential, like in the futures, you get a nice 10-point move. You're trading a couple contracts of the MES, and it'll cost you $50. You could double your money, basically, on these trades. That's it's a huge percentage gain on these, huge. All I'm really doing is just kind of embedding this in your skull, the importance of seeing what's happening here. In this video, we didn't go into, or in this webinar, we didn't go into the mechanics of the stochastics and how they're working. But I've gone over that multiple times, and I continue to go over that on the show and stuff, and talk about the look back period, the moving average that's applied on it. But really, it's about the momentum shifting before the price shift. So that's why this is so important to look at this and tell me there's something out there that's better than this to predict moves like this. You can't. Sometimes I think to myself, Jesus, maybe I don't want it out there as much, because then it becomes useless if everyone looks for it, But there's other things that you have to add to it. It's just not, that easy of the game. I always, one of the chapters in the School of Stock course, which I'll give a plug to right now. This is, if you go to, let's actually go to Day Trading Radio. School of Stock course are 2 courses I wrote. One on basic understanding of the HPS, the high probability methodology. That encompasses using the 5 indicator system and taking 3 of the indicators to line up to take a high probability setup trade. But also I did a special in-depth course on divergences and divergence traders, because that is my and that's today's show, Paul. If you click on that, if you go to Day Trading Radio, you actually you can register for a 10-day trial and trade with us and get in the room and say hi and get a lot of your questions answered. So definitely take that into consideration. But so I'm going to log in here, and then we're going to, this is our dashboard. And you get this as a member. I'm just going to close it up a little so you can see the whole thing. Down here in the lower right, we have some of the apps that we use here on the, or kind of like, we have our tradeometer, which, you click on that, it'll open right up. And it's a order entry indicator. I mean, it picks the highs and lows of the more. Look at this. I already got I think Bay Street Trader said he took three scalps off of this. He's already up $400 in the morning. Look at this. Sell, buy, sell. All right, and it's really, you're really supposed to zoom in on this. Look at the buyback here, right at the low. I mean, this is what I programmed years ago, and this was one of my first real good observations of the market. When things start to come together, I want to know when those, I want to know when that divergence happens. I want to know when in this case the time frames all match up. So I'm measuring out all multiple time frames on this, and when they all cross over to a buy or a sell, it's like me looking at the stochastics. It's actually looking at, that's what we call a triple stochastic buy signal, or triple, it's where it's actually a good technique If we go back here, it's really just about, how's the NASDAQ? Let me actually close that. It's just waiting for all, this will be choppy, but they'll all be starting to come down, and the 60-10 takes the longest time. So by the time that gets into overbought level, these typically, if they start to come down at the same exact time and you have a lineup, almost all of them underneath the 20 line, that is called a triple stochastic buy signal. And that's usually a good spot. Now, if that comes on a trend line, looks like it did. Looks like it was a perfect trend line going back to this big pattern up here. Wow, look at that. I didn't even put that in. I mean, these lines have been here, so came off of that. Anyway, so it's important to understand the use. And again, there's other things that will play out and give you confidence in a setup, and that just takes time, a little experience in the market, or just a little guidance. Which that's what my job is, to point these out, take the trades if I'm in a position. Lots of times doing the show, believe me, it's harder to take positions while I'm doing this show because I am very conscious of not chasing things. And if I was concentrating on watching this, I know exactly what I'm looking for. Oh, there's a low. Let me see if the lower low is going to set up. And I could even gauge it's going to happen before it happens. I'm ready to get in, and I'm the first person in. In cases like this, I might be doing something, reading the chat room, come back, and then there's a nice divergence, and it's up here, and it's still good divergence, but, I always feel like I'm already giving it up, and you get a little bit more nervous at that point. But then you look back and you see these big moves, and you just got to take them. There's so many analogies out there, so many cliches. It's just when the pitch is there over the plate, you got to take it. When the cards are in your hand and they're good cards, you got to bet. When you have that divergence set up here, and that's where we work really close together, and we know when the divergence sets up in a channel, it's a much better divergence. We know the steepness of the divergence. All these things we do live every day. So I was just showing you the tradeometer. The tradeometer was that's giving some good signal. I'm going to let that run behind the scenes here. Maybe we'll hear an alert. I have high tick. When you hear a high tick alert, and I do push-ups, it's all based off the tradeometer hitting a high tick. So we could set the tick up here, tickometer, and I could set this. If I go to the wrench here, it'll open these up, and I can set alerts. And it'll give me an alert if the tick gets over 700, or I can put it to 1,000. But 700, I put in the alert system. It'll say high tick alert or low tick alert or whatever number range you want to put it in. But the higher, the better. When we hear a high tick alert, the market's very bullish, and low tick alert, it's very bearish. So it's good. 700 is a good mark spot. So let you know that. And again, another trick here is you could look out and say, hey, this came down, it bounced, but then it rolled over, went a little low. Yeah, it did, but these are really hyper scalp target signals. They're really based off the 1 minute time frame. So, but it's also the 5 minute coming into play with this also, and there's a lot of things. So you're gonna get these little bounces, and that's really what it is. That's a 1 minute chart. That's almost like 20 minutes, 20 candles or something of sideways action. It didn't not work out. It just wasn't perfect. Here it went up a little bit higher, but generally speaking, when you zoom out, you see it is very close to directional moves in the market. Sometimes you get a little bit pushed through, but it's one of the tools you could use. And you use that. I love when I get a divergence and a sell signal on the tradeometer. I mean, that's the ultimate setup. That's the time frame, rotation, and a divergence. So it's good to have all these things running in the background. The other one is, let's see if I can bring up the other one. If I can find the site. I don't want to waste the time on this video and You just have to go to the site. You'll find it. It's down. Oh, so the Rockbot, the School of Stock. I was talking about the School of Stock, and I wanted to show you that. So the Ultimate Divergence course is where it's everything you need to know about divergences. And I update this, and this is, to catch you up to speed and stuff. Each one of these are lessons, and so all my notes. I have some other things, videos. This is my sell side divergence, higher high, the lower entry, and then just a lot of different lessons. And this is the other one. This is 1 minute live updates. Even live updates I did. Just if I see a great example, I'll update the chart. Well, let's that'll catch you up to speed. That really will catch you up to speed. The markets look pretty good right now. Let's get back to just kind of going to review what we were looking at this week. It's kind of a loosey-goosey review here, but just want to go over the slides and come on. Give me a second to get the slides back up here. All right, so we just left off with talking about divergences and what they look like. Adding divergences to other indicators. So same thing. You have a divergence, but you have an underlying trend line that's established. As long as it's an established or an old one, and you come down as a divergence on it, great spot to be in. Candlesticks, we went over the candlesticks. Really just three important ones. The hammer or the shooting star, that's a reversal on each side. The hammer is for a bottom, a buy signal. A shooting star is usually a sell signal, and that's usually on the second stage of the divergence. You're looking for these candles. You're looking for on the second stage divergence, stage 1, first low, stage 2, lower low. That lower low with a reversal candle is what you're looking for. Engulfing pattern, same pattern, another great pattern. I would do the same thing on that. It's like I said, there's really just three good ones. 4, I think, a piercing pattern. They're the same thing. They all have the same thing in common. They take out the low and they reverse higher. And that's the first sign of a reversal. Sellers give up, buyers are in control. All right. Continue on 1 minute time frame. Comparing when we talk about trading the micros versus maybe trading the SPY or trading the calls, there's different ways we can trade these signals. It doesn't have to be the micros. You could trade SPY calls on this, weekly SPY calls that are kind of in the money. They move around real good with the market. So you get a nice divergence. You could get nice returns on those. An example here, there was an hour trade I think that I was in, and I was just doing two comparisons. A call versus the SPY ETF shares. So that's a 0.25% move. I remember, first of all, you're putting up $236 a share on, that's a lot of money to be putting up just to be scalping like this. So you really have to get a lot of shares, and then you're not going to get the biggest percentage. Where the SPY calls here, you're making 30% on your movie. I think you made 27 cents. You bought it at 50 cents. You sold it at 70 something cents, something like that. And you made 30% on that. That's a big, big difference. But then again, you have the futures, and I think the futures are one, that blows everything away. So I'll give this will all be going out to you anyway. I kind of do the calculations there on just the comparisons of the SPY options and the futures. And if you put the same money in, what you can make. You can review that. That's more of the same thing, just comparing the different moves that you get based off the signal. So if there was a signal here, a nice, beautiful, high divergence, and you got the, a comparison, if you had the options at that point, weekly options, probably right in the money. Yeah. That went up 30% move, 27 cents it went up. This went up 64 cents. That's 0.25, right? So that is, let me jump over here. Again, I go into this a little bit more. I'll send this out. I won't spend time on it. I think there's a tradeometer. One last thing. I went into this enough that I think it's important to go into it again. The bull flag and the bear flag. They're really good patterns to trade in a good, strong market. And it's an easy way to identify it. I've put together a perfect formula for this setup. Very good. It's highly successful. I love using it. And that's the only thing I use for a bull and bear flag. So I'm going to show you that fast. It's called a 2020 bull, 2020 flag, the 2020 bull flag, 2020 bear flag. So I'm looking at the, I said, let me go to the course. This is on the high probability course, and you can see right here, we were just talking about the triple stochastic flag breakout. Triple stochastic flag breakout is another way of saying the 2020, because I'll explain it to you how we kind of push up above the 80. So there's a nice little video here, but I'm going to go into more detail. But just to let you know, there is a video on the triple stochastic flag breakout, aka the 2020 flag setup. All right, rank number 2 in my trade playbook trades. Rank number 2, that's a high ranking. That's a great setup. And let's just go to the main chart right now and see if we can identify any of them live right now. Yeah. So basically we had what we call a triple stochastic rotation setup. And even though there's 4 here, that's because we got rid of the 44. But I keep it there because I've done a lot of studies on it, used it in some of my old formulas, and it seemed to, give me, every so often would give me a good signal. And if I see a signal on the 40, it represents something that I don't usually look at, and it usually works really well. And it's very rare. And I don't know if it is a real good divergence. It might be a divergence that shows up. It usually is, and it's one that I don't see very often. It's kind of like in the middle of the 14 and the 60. 60 I see quite a bit, but sometimes the 40 I don't really see as much. The 60 is easier to read, and that's timing off the 5-minute there. DWAC here is moving up here, $85. That thing's amazing. All right, so the rotation or the flag setup. First of all, the flag, what we need here is a trending market for a flag, and that's usually a kind of a aggressive type of trend, downward or upward. It doesn't matter. So we'll take this downward trend here because it looks like a one. And this is early in the morning too, so this is well, let's start with the positives, because I teach this one a lot and I talk about it a lot, so it'll spark your memory. Now I got to find some. All right, this is very close to 1. But basically, I want to talk about the criteria that I look for. Usually it has to come after kind of a spike up, pretty steep move up here. Pulls away from the 20-period moving average. Then it drifts back down into the 20. And as it drifts back down, the fast stochastics, the 9-3 rotation, comes down under 20 or around 20. It doesn't have to get to 20. It doesn't have to get to 50. It's just showing us that the pullback, and that's something, again, you'll have to measure. As long as the price is touching that 20-period moving average and not breaking down, and we're getting closer to oversold, or we are oversold, that is a great indication in itself. Then I look at the same time, I'm looking at the underlying trend. How strong is the underlying trend? And I look at the 60-10, and if that's above 80, I consider that, you know, a very strong trend. And this one looks like it was actually under 80 at the time. It was probably like 71. So well, I actually got it back above 80 right when we're about to break out of that flag. Let me see where that shows up. I don't know. I forget how to get here. The lines in here. Now there they are. No, it wasn't up. Anyway, that's very close to a bull flag. What I like about it is the fast rotation holds the 20-period moving average. But it's, you know, this is the key too. These 60-10s, you know, I like it above 80, especially when it's really pinned up there. When you get it really pinned up here and you get a little fast little pullback, it's easy to see that fast pullback right here. We pull right back. We held the 20-period moving average. By the time we got down there, that was a good one. This was actually right at the 80 line. It was actually heading up too. But long as the price holds above the 20-period moving average, and the 9.3 here drops down towards the 20, it doesn't have to touch it exactly, and it has to have the feel of a flag too. All right, it has to have that. It has to have that momentum blast off. We identified this. There was a bearish flag. This was a good move down here. We were all over this market the other day. When was this? This was Thursday. So yesterday, I was calling, you know. So it was a nice divergence. We talked about this was a 10-point box. That the distance between in that box is 10 points. So you could see even the range you could get on a lot of these moves now. This is a perfect time to be trading this. We had a sell side divergence, then there was nothing here. I'm just measuring things out. We were talking about a possible bear flag here. And the bear flag is stochastics under 20, which I think we were. That's why I was looking at it. The rotation, trying to get up to that 20, but we never got up to that 20, and we held under the 20. And right at that candle right there, I remember saying it. This confirmed the bear flag. It closed under the 20. It really did close under the 20 right there. Failed to rotate back up. This was embedded, you know, and then that bear flag fell out perfectly. So that was a good bear flag. Let's see. I think there was. All we have to do is find a trending market, and then you could see it much easier. This is kind of one right here. Again, you see the angle away from the 20, kind of pulls away from the 20, then it drifts back in. That's a good one. You want to get that explosive, what we call the flagpole. Has to be pretty straight up, you know, more aggressive, the better. And on that pullback, you see we're getting down to that 20 line right there. We got to the 20 line. 14 also rolled over, but this was holding and actually grinding higher while that was happening. This was extremely strong. It was way above 80. I think it was probably 90 something. Or close to, it was over 85. And this fast rotation was perfect, and the price held the 20, and that was the big move off of that. I remember seeing this one. That was overnight too. I mean, that's a good overnight. Like I said, the 2020 bull flag. If this all lines up, this is overnight over 80. Higher the better. Higher the number, the better. This rotates back down, and this holds just like this. This is the result. I mean, I rarely see them fail. As long if they hold at 90, or I should say the 80 level on the slow stochastics, if they could hold that level, and that's on the buy side, and just the opposite on the sell side or the short side. This wasn't, you know, we broke under the 20, so it wasn't really one. But lots of times I'll notice that the 50, if the market is strong, we kind of came down and everything lines up like we were talking about. This actually ended up being a divergence. That's why it moved. Look at that. Look at that nice divergence there. That was a pretty steep one. And went really based from this candle to this candle. It wasn't, I mean, I could see that a mile away. You might not. I don't know. But I could see that. I mean, that big reversal candle, you could see it was a little bit lower. It was in this little pullback. It was perfect. I mean, you had to be studying that. You had to be watching it closer. I mean, it's easy to be a Monday morning quarterback. I am not one. I would have seen that. That was 4:30 in the morning. I'm never gonna see that. But let's remember, they work great. So, and it's not something you just have to wait for it. You have to have the right, here you have to have just the right, what's the word I'm talking about? Conditions. You have to have it pop. Now here we broke under the 20, but my rule is as long as the candle is attached to the 20, it doesn't close or stay under the 20. As long as if we're chopping around that 20 and our closing price is basically right on it, I don't worry about the candles under the tails. I worry about the closing price, and we're closing right on the 20. This is rotating back fast. This is above 80, and it's been right when we get that pop. Yeah, I mean that's what you're trying to time, these little pops. You can see one. Here was a nice kind of a bull flag. I mean, that was a little sloppy, but you had that rotation. This was holding, and we're holding the 20. And it was. I mean, this one is a pretty good one, but it did break under the 20. So, but that was a very fast rotation like that. And I like those fast V-shaped rotations, and these hold above the 80 line. That's my condition for a flag. Doesn't happen like here or anything. It's just, it needs to have that powerful first move, that flagpole type of move, and then it kind of settles back in, and you just pretty much your 60 is really going to determine the strength of the underlying 5-minute trend. And you want that at least. I like to get it over 85. I just kind of use the 80 as a rule to start things off, but you can adjust it. Learn how to watch the relationships of the longer term and shorter term time frames. Usually really good. All right. I think that's good. I want to do that as a wrap up of the webinar. Give you a little bit more education on the 2020 flag, a little bit more, focus on some of the things. But this is what I do every day, so it's not like, you won't see this again. If you have any questions, definitely ask them. That's a good thing. There's no question I can't answer about this or give you a logical opinion on it if it doesn't have a true answer. So that's it. What else do I want to say on this? It's 43 minutes. I think it's enough. Anyway, we have the free trial, 10 days. You got to come over, trade with us. Small accounts, specializing in this type of trading. Do it every single day. And also trade stocks, options, everything. And we have a great team here in the room. A lot of great guests come on the show. A lot of great traders here. So we'll see you there, daytradingradio.com. Hope you enjoyed this. If you have any questions, just reach out.